I played meta, but here I just decided to give it a shot up there. I did feel like we dropped back into the tail area. I was waiting, but I didn't get much here. So I got a couple hundred shares. It was like nothing. So normally I'd be out. I held it. I stopped out. All right. So I want to tell you the trade. So I stopped out there, and largely I stopped out because your shorts should not be doing this. Let me show you. So you're short here, your shorts should not be doing that. You see that right there? The first thing is that you broke the first time. So it's sort of like that two red bar rule. You broke above and came back. Now, this is sort of like your two bar stop, your two pivot stop. Like if it goes up there again and breaks this one, then I'm just an idiot for holding on. So I'm out, but it runs up and it falls back below my short, my stop out, and I immediately get back into it. And that's a good stop out. That's a good reentry rule for you. If you get stopped out and the stock violently comes back to say, wow, maybe you shouldn't have gotten stopped out. That's my that's an almost an automatic reentry rule for me. Got back in, and here was the play. And I grabbed $4,300 on that play. Let's cover your play. Let anybody do the PayPal that they're willing to go over. Okay, let's do it. Yeah, Ake was the one this morning. Michael, you too? You did it as well? Michael, let's take yours first, okay? I like this because it has all the elements. It has a lot of the elements, I should say, I want you to become good at identifying. All right, so neutral bar, that's the first thing. So, guys, very quickly, Michael, let me just say this. Neutral bars can be handled one of two ways when the neutral bar is the bar starting the day. If you're in a good to decent position, the neutral bar can be used as an entry item. So you break the neutral bar, you give it a shot, stop above the neutral bar. All right. You can use it, but it needs to be in a decent position to use it. Or there's no right or wrong answer. It's your choice. You can pretend like the neutral bars don't happen and play the second bar like it is the first bar. Anticipation entry, stop like that. It's really up to you. Now, let me give you a guideline as to why this morning, if this were my play, I'd go under the low. What was the color of almost everything this morning? Red, right? So you've got a greater benefit of the doubt on the downside. If it just starts moving with the market, I'm going to take it. If the majority of the market was green, I'd probably not take this. I'd probably take the route of pretending like this is not there. Does that make sense? Now, at some point, guys, these little things, you might take a note about them now, but these little things will just be automatic common sense for you. It's not going to be like a tactic or a method. It's going to naturally be the way you just put things together. The same way you do with anything else in your life that you're so familiar with. Just it takes time and it takes a lot of experience, but it starts coming together and these are things that are not strategies as much as just common sense. Everything's dropping, everything's red. This is breaking below the first bar. It's not that hard. So Michael, continue with us. Neutral bar. So did you enter on the third bar? Where in the third bar? In the middle of it? Is that about right? Where I have it? How many lots? Two lots. So guys, you know that the up move after a bar like that is usually fake. So everyone here should know this by now. Got a power bar. There's nothing to be afraid of the green bar trying to climb it immediately after. That's usually a gift. Now the real play is under the bar. That's the plain vanilla play. I would be shorting up the bar too. One lot on the actual color change part of it, or the GBI. Got it. one lot on the profit, move stop to break even. So remember we're on a LIFO system, last in, first out. So this one is eliminating that one, which means that your break even is on. Okay, took another profit. Where that's a big bar. So where in the big bar? Top, middle, bottom third. Which third? Got another one out. Bar by bar out. About right there. I like it for a $50 stock. This is 57 to $55 and a half. I'm good with that. So you took profits after that bar like that. Nice. I like it even better now. Good job, Michael. Separation between the profit takes. I like it. Separation between your first profit take and the last add. I like it. Excellent entry. Max. Dual tails there. I like it. How many lots? One lot. Okay. Okay. Two. So max gets brought down. 69. Is that right? Kind of go over the characteristics of a power trend so you can catch. The first thing is the angle. A power trend is usually not steep. That's not a power trend. A power trend is usually 45-degree angle-ish. All right. So that's kind of quality number one. 45-degree. Too sharp can't be a power trend. All right. So, in essence, a power trend is not a collapse, it's a trend. A trend is different from a collapse, okay, or a surge to the downside. It's a drift, right? That's what a power trend is. It's a drift. Think of bullet train and locomotive, all right? Two different trains, right? Okay. Um, the other characteristic I would have you is that most of the bars, now, not all of them, it's rare when you get all of them. Most of the bars are little. With the exception of a few, most of the bars are tiny or relatively small, right? Normal to small. That's quality number two. 45-degree angle, most bars are small. Third quality, no contact with the 20. Right, you can't be contacting with the 20 and be power trending, okay? The other quality is, I would say, frequent GBIs on the short side, frequent RBIs. So you get one, at most two. So look at this, one, at most two. So one green, two, one green, one green, two, two. Does that make sense? Mostly GBIs, at most two. All of those kind of give you a clue on power trending. Now, why is the ability to determine trends important? Because it can eliminate a lot of noise trading. All right. Because this really is a lot of noise right here. So if you just power trend this thing out, you ignore the noise. Now, I still think that Thiago played it very well. He does a lot of advanced orders, so that's a very different style. But if you had one lot, I'd like to see you ride this out in power trend style. Thiago had a lot of lots, so he has the right to do anything he wants to with those extra lots, right? But if you had one lot, this is going to be your anchor right there. So let's go 13. Let's go 13 and see what we got. Okay, there you go. So now you're gonna that's because this is your anchor. Now ride this thing out. Now, if you had two lots, I like taking profits down here because see how you shift downward. I don't know if you see that. There's like an angular shift there, a little bit more. You guys see that? The main purpose of a moving average is to stop looking at the bars the way you would normally look at the bars. You can't stop looking entirely. But what I'm saying is now all of the wiggling and jiggling doesn't matter unless you move away. You start to move away here. All right. You just start to move away. Until you start moving away, all of this wiggling and jiggling doesn't matter. And that's the main purpose of a moving average is to be the substitute for the stock itself. In essence, the moving average says back up, back away. Just keep your eyes on me, back away. Don't, you're too close to the bars, back away. That's what the moving average is used for, backing away. When it's not time to back away, the worst thing that you can rely on is a moving average. When it's time to be in the bars, that's when the moving average becomes your enemy, right? So you got to know when to pull it out and when not to pull it out. When the pullback breaks through the 20 by a lot, I believe you used to say that's a heavy entry. William, you said you were watching the bars too much. Yeah, you got to, there are times to be a bar watcher in every minute detail, and there are times to step back and look at, so instead of looking at the individual trees, you step back and get a bigger view of your forest, right? And you got to know when to make that ebb and flow because sometimes going in to look at the individual trees is the right thing. And usually the key is, guys, you have to think generally. If you're near something, it's not time to be detailed. When you are away from something, it's time to be detailed. So, for instance, let me go over this. This is important. I teach you that I teach you to come in. Let's say you did this, you took some profits, you moved stop to break even. I teach you to come in here, but I don't teach you to put an immediate stop there, do I? And sometimes you have to, but for the most part, no. What do you need first? You need to get away. You see, you need to get away from this beginning. You see that? Now you can go detail. You understand? So if you think about this, it's always when you are away, you go detail. When you are near, you stay back. If you are near, you stay back. If you are near a pivot, you stay back. If you are near the entry, you stay loose. As you get further and further away from your entry, you tighten and you tighten and you tighten. As you move further and further from the 20 period moving average, you tighten your stop and you tighten. So everything is near is wider. As you get further away, you get narrower, you get more detail, you get tighter. This pivot here is really your last major thing. So it's not really until you get this move here that you have another thing to reference. And while this is not a pivot, you could use this, but once you are away from it, now you can use it. The only time, like for instance, here you went wrong, you got out, but you got back in. If you do solid bars before you're away, you can get in trouble. Like, so here's a solid bar, but you're really not away from anything. This one's a little bit better, but let me show you this. Let me show you where solid bars can go wrong. It's when there's another part of the solid bar. So the proper way to look at this move is from here. So this is the top of your solid bar. Does that make sense? That move down started from there. It didn't start from the red. It started from here. So if we draw that in, that's your solid bar. And so sometimes a trader is using a solid bar that's not a solid bar and getting stopped out in the wrong spot. So if you take the beginnings of these, you get in less trouble with them. Okay. In reality, this bar is from here to there. That's your real solid bar. Okay, now that's taking it a different level. So this move down is really from here, right? So this is really your bar. It's just that the time frame you chose split the color red up. That's all it did. It split the color red up because if you combine this, it's a tail. Like we can go to the 5 minute and I can show you. If you combine it, it's a tail. There is no splitting up of the move down, it's straight down. So when you have this understanding that the division, what's dividing my bars is my choice, but price is never divided, you start to see between the lines. It's a deeper level, and you should not force that. It comes where you start to see that this chart is stopping. This chart is stopping the drop here. It's dropping. It stopped the drop and continued it here. But what if the chart didn't have a stop? It would look straight down, and markets don't have a stop. So this is really more the truth. What I just drew. It went straight down from here to there. It didn't stop. Us dividing the activity.